Good morning, and thank you for joining us today. I'm pleased to introduce our webcast, Tribal Government CFO Roundtable Taxation Update. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Hello, and thank you for joining our webcast today. My name is Brandon Valentini. I'm a partner with Moss Adams, and I'll be moderating today's webcast. It's my pleasure to introduce today's presenters. Christie Jacobs, the Director of the Indian Tribal Governments and Tax-Exempt Bonds Department of the Internal Revenue Service, Patty Mayer, a Tax Director with Moss Adams, and Ryan Luetkemeyer, a Senior Manager with Moss Adams. What we're going to cover today, we're going to provide an overview of the Tax Cuts and Jobs Act. We're going to discuss how this tax reform will impact tribal government employers. We're going to provide some updates at the IRS Office of Indian Tribal Governments, and final comments and conclusions with a question and answer session if time permits. So with that, let's start today's webcast. We're going to start off by having a polling question, and these polling questions are important to receive your CPE for the webcast. So the first question is, what type of role or organization do you represent today? And we'll give about 30 seconds for the audience to respond. Excellent. Oh, so we've got representation from each of the groups. Let's get into today's webcast, starting with an overview of the Tax Cuts and Jobs Act of 2017.
Thanks, Brandon. Thanks. Really excited to be here with you guys and Christy and Patty. the way we're going to be doing this, it's more of a roundtable format, focusing more on a discussion of these important concepts, not just a lecture. So really excited to be here with you guys today to talk about the Tax Cuts and Jobs Act of 2017, which was signed into law on December 22nd of 2017. As Brandon mentioned, regarding the questions and answers, if you do have a question, please go ahead and submit it. We'll try to incorporate that question into our presentation and our discussion. So please let us know if we could help you there. But the Tax Cuts and Jobs Act, a very important legislation, but not a lot of mention of tribes. But indirectly, tribes are impacted by this. And so, Patty, can you please summarize the major changes from the Tax Cuts and Jobs Act for individuals and businesses and how these changes might impact tribal government employers?
Sure, Ryan. I'd be happy to. On the individual side, we're going to be going through some slides pretty quickly, but it's available for you to download if you'd like to have them. We're going to show income tax brackets and rate changes, talk about the kiddie tax changes, changes to standard deductions, exemptions, and tax deductions. So income tax brackets, this is for an individual filer, and the top arrow, that is before 2018. The bottom one is the new legislation, and you can see the rates are lower, and top rate is actually lower as well, and that continues out. So there is definitely a drop in rates. So that's good news. For the married filing jointly, next slide, yeah. Married filing jointly, it's similar, also lower rates. Here, the 37% rate starts at $600,000 of taxable income for joint filers. There's a nice 24% rate that covers people in the over 100,000, but less than 300, a little bit, kind of in between 300 and 200. 22 holds for a while. A lot of people should be able to see that, or the 12%er. So let's go to the next slide. The kiddie tax. What the kiddie tax is, this is a tax, and it was really originated for where there were high-income taxpayers, and they were shifting their wealth to children to take advantage of lower rates. So they said, no, you guys can't do that. We're going to tax you on unearned income, which can include interest, dividend, per capita payments going out to minors. We're going to tax you at the parent's rate, not at lower rates at the children's level. Well, what they've done is they tried to simplify this, but actually it's caused a pretty big problem and concern in that now instead of using single individual rates for the child's unearned income, we look at trust rates. And off to the side, you can see how quickly at $12,500, the 37% rate kicks in. So there's going to be, this is on if you receive an excess of $2,100 of unearned income. So there's going to be planning that will need to be thought about, looking at minor trust amendments. Can any of that happen? And delaying or staggering payments. So for one of the things that's really important to tribes is if you want to encourage your tribal members to go to college, that is an awesome thing. But this is almost a decentralization not to go to college, because ages 19 to 23, if you're a full-time student, you're still subject to these rates on trust payouts, but there's a way to try to get out of it, and that is looking at support for the student. If the support for the student consists of scholarship money and a minor trust payout, you want to look also at that. Actually, you want to look at earned income. So the scholarship money doesn't count, and earned income, if that contributes more than 50% of their total support, then it could be worthwhile to have the student get a part-time job to be able to not be subject to these rates. And any other comments?
Yeah, Patty, I think what you're talking about here is significant. Previously, with the kiddie tax, I always thought of that as something that for wealthy individuals to, find ways of, stashing away or reducing their tax burden. But now, with this kiddie tax simplification to some degree, your minor's trust distribution is actually taxed at the high rate of 37% after a $12,500 threshold. So it's a significant tax burden for those minors' trusts when they receive the distribution. So like you pointed out, there should be some discussion at the tribal government level of potentially modifying or amending your minors' trust if you can, to potentially defer the distribution or find out other ways of reducing that tax burden.
Yeah.
I'd like to take this opportunity to thank one of our tribal CFOs for their perspective in this webcast, which has been incorporated. And obviously, this was one of the topics that we discussed in depth. So I'd like to thank Mr. Steve Garwood, the CFO of Morongo Band of Mission Indians, for his assistance and perspective in today's webcast, because certainly, this was a topic that we discussed in depth. Yeah. So thank you for that, Steve. A little shout out to you.
Good. Okay, other changes to the standard to deduction, and this is where a filer can itemize deductions or they can take a standard deduction. And so you can see there has been a significant increase in the standard deduction. So this will allow taxpayers, if it's better for them to take the standard deduction, they don't need to worry about all their charitable contributions, interest expense, all the categories of itemized deductions, which also have changed. They can stick to this. So this can be a great simplification for taxpayers. Exemptions, it's based on the number of people filing. Like if I file for myself, I get an exemption under old law. And if I have any dependents, I also get a deduction for my dependents. Well, now this has been reduced to 0, and it's going to be temporary through 2025. And one thing I didn't mention at the beginning, on individual changes, generally they sunset. For business changes, many of the provisions are permanent, so we have a distinction between the two. What Congress did was, because of taking this away, they replaced it with a child credit, and they've increased income levels to be eligible to take this credit. So more people will be able to get this. Deductions. There's been a lot of changes in deductions, itemized deductions. State and local income tax, we have a slide on that. But mortgage interest, that changed. It used to be you could have $1 million of acquisition debt. It's dropped to $750,000. Charitable contributions was deductible to the extent of 50% of your adjusted gross income. That's increased to 60%, so it went up. That's good. Personal casualty losses, if you have a loss that hasn't been reimbursed by insurance, now the only thing that qualifies if it's been declared as a disaster area, federal disaster. So that is something also that tribal council might want to look at, how they're helping their members if they do have a casualty loss, because it's now non-deductible. Medical expenses, they've changed threshold and it's going away. So tribal members again and council might want to look at, is there more that they can do, or are they doing enough? Maybe revisit things. Job expenses and miscellaneous itemized deductions have been taken away, and that includes maybe if you're paying for investment advice, tax preparation fees, unreimbursed business expenses. Those types of deductions now are not there anymore.
And Patty,
yeah.
Patty, the personal casualty losses and how that impacts tribes, I think that's rather significant, because now what you're saying is that you need to be declared a federal disaster area to receive deductions and reimbursement for those losses. Now, which was different in the past. You didn't necessarily have to be declared that. So if your tribal reservation is subjected to a fire or some other destruction, and you're not designated a federal disaster area, then there's some losses that could occur there too.
Right.
Yeah.
Right. So let's go to the next slide. Okay, this is just a quick slide on state and local income taxes, which now is limited to $10,000 instead of whatever you incur for your real property, state and local taxes. So the chart is just showing how different. It's based on a sample that about 30% of people were under 10,000, so it won't affect them. And then how about 54% are greater than 50,000. So again, if these are state and local taxes, so it might, I don't know if tribes want to think about, gosh, maybe we can get more members moving on the reservation because they're not getting full deductions. It could be opportunities to expand housing at the tribal level, if that makes sense. Okay.
You know, one of the things that's always important is when members go off and they go to college and you know, getting that knowledge and that, you know, coming back to the reservation, and I think of finance and accounting as a great example. Mm-hmm. This actually might help incentivize that to come back, like you were mentioning. So the state and local tax deduction, again, it doesn't affect everybody, but those local taxes, that includes property tax, right? Mm-hmm. Basically all the state and local.
Right.
So for 54% of the population, it certainly will affect them.
Right.
Mm-hmm.
Absolutely.
Yep. Thank you, Brandon. For businesses, in mentioning the provisions here, a lot of it is really for your tribal members who have a business, not the tribe itself. But we wanted to go through them because at the tribe level, it's more of a competition that is going to be affecting the tribe because the first bullet, corporate tax rates have dropped from 35 to 21%. That is a big drop. Also, within these provisions, net operating losses used to be that you could have a loss and not pay tax. Well, now if you have a net operating loss, it's only deductible up to 80%. So you would have a 20% taxable income. That's the big change. There's a qualified business income deduction that we'll talk about on the next slide. There's some bonus depreciation, which is very, very favorable in getting new or used equipment. It used to just be, it had more stricter rules, so now that's easier to get those deductions. There's changes in the fringe benefit area, and I've itemized a couple. Entertainment, you used to be able to deduct 50% of your entertainment expense. Now you cannot deduct it. Food and beverage, for the convenience of the employer, you could deduct, but now you cannot. So there are different rules there. Moving expense, this is, if we're trying to recruit someone, bring them in, that person that you paid for moving their household goods over, that was non-taxable to that person. Well, now it is taxable to them. So that's a big change as well. Any comments? You good? Okay. On the last slide here, this one is, did you want to?
Yeah, you're fine.
Oh, okay, sorry. On the next slide, pass-through changes. What this relates to, this is a whole brand new concept, and it relates to, when we think of pass-through, we're talking about S corporations, partnerships, and also sole proprietors. So it's businesses that are not corporate form. That's the easy way to look at it. They will get a 20% deduction if they qualify based on their net income. So the reason they put this in was because the corporate rates had dropped significantly and the individual rates dropped a little bit, but not as much. They said, okay, this will be an offset to help businesses where they're not a C corporation. Yeah. Also, it applies to pretty much service industry like health, accounting, actuaries, performing arts. There's a list, but what's Excluded is engineering and architecture services. Those are still okay. So this could be something that you could get. There's a lot of rules. It's very complex. Depending upon income thresholds, you would need to look at W-2 wages. But if you're a smaller taxpayer, you could get this, and it could be a really help to you.
So let's discuss this a little more in depth. Ryan, go ahead.
Yeah, no, what you're saying, Patty, ultimately, with these significant reductions in the corporate tax rate and this new qualified business income deduction for pass-through entities, now non-tax tribal corporations have become a lot less competitive when talking about these for-profit businesses. So something to know. And I know, Christie, you were going to talk a little bit more about that later on, but I think it's an important thing to kind of go through this and think about that and consider restructuring some of your tribal businesses in the future.
Yep. Yes. A lot of things.
Yeah, it's going to have a huge impact, not only in Indian country, but across business in general, to be sure. So we recommend that you look at the details, obviously, because it is complex, and there are certain businesses, like we mentioned, that are not going to be eligible for some of these deductions.
Right.
So I think we are going to move now to our next polling question. Do you believe the reductions to the individual and business tax rates from the tax reform will significantly impact your tribal government operations? We'll give you about 30 seconds to a minute to answer. Let's check the results. Interesting.
Yeah, well, I think when we talk about these tax rate changes, we'll get into how this impacts tribal government employers. It would have a significant impact on payroll tax withholdings and per capita withholdings that aren't available yet. I think that will have an impact, but the business entity structure might not impact a lot of tribes that don't have a lot of
those
corporations established.
Tribal enterprises established. Exactly. Very good.
Okay. Yeah, I mean, I think, Christie, like we said, that there's a lot of indirect impact to tribal government employers that, tribes are going to have to consider. But from a legal and sovereignty perspective for tribes, how does this tax reform impact tribal governments?
Well, I think as we've talked about, there wasn't, other than a provision related specifically to an Alaska Native Claims Settlement Act corporations, there wasn't something specific to tribes. But as Patty's talked about, I mean, tribes are employers, and so those changes are going to impact them. So, for example, the 2018 withholding rate changes for all of your employees, you're going to need to be adjusting the withholding to comply with the new rates, the new lower rates, which will undoubtedly make employees happy, right? And so those withholding rate charts are already out. So they're there. They were released on January 11th, and they are on the irs.gov website. So you have those already. And I just want to, I know that in our office, we all constantly preach to go to irs.gov/tribes, because that's where specific things for tribes are. But in a lot of the tax reform things, like I said, they're not specific to tribes, but they impact you because you are employers. So you need to sort of put that advice aside about going to the specific part of the website and make sure you go right to the landing page of irs.gov. Right now, if you scroll down, it's down in the lower left, there is a place to click on for tax law changes, and that's where the service will post everything as it comes out related to this new tax law. Right now, what there is there in specific are these withholding tables, and what I want to make sure and mention is that the way they're designed is that you do not have to get a new W-4 from every employee. They're designed to take into account whatever one you have on file and implement the new rates. So that should lessen the burden on you all as employers. Now, if somebody had a situation change and they need to file a new W-4 with you, that you obviously do that, but you don't get confused and think you have to go request new W-4s from everyone. Those tables should take that into account. One of the things that, again, giving a shout out to Steve Garwood, our star CFO today, I guess, that he wants people to be particularly aware of, because you might not think of this, is that the withholding is going to change for those tribes who make per capita payments. That's in a different rate chart. It's not the one for employees. That comes out. It will come out in the normal 15A, the pub that you're probably all used to, and reflect those new changes. And that will get posted to that section of the irs.gov website that I mentioned, but it is not out yet. All of these things are being rolled out, obviously as quickly as possible. And so just stay tuned to that website. Keep looking to see when the new thing comes out. One thing that we also need to talk about, and I know we'll get into some other things in a minute, but some things that are key in the tax code for tribes did not change. So, for example, the tribal health care section 139D, that is all still there, and the tribal general welfare benefits through the General Welfare Exclusion Act, section 139E, that is all still there as well, and we'll talk a little more about that when we get to talking about the Tribal Treasury Tribal Advisory Committee. But so that's good. Those are still preserved in the code and did not change. So some of the things, Ryan, for tribes is more what wasn't, what didn't change.
Right.
It's good news.
Right.
Right. And just to be clear about the tribal health care, if a tribe provides medical services to tribal members, the tribal members do not need to include that as part of their gross income for their tax returns.
It's akin to a general welfare benefit, yes.
Let me chime in real quick. We actually had a question I'd like to see if we could provide some guidance on. The question is, is there an idea when the 15A will be published, when it'll come out?
I don't have a specific date.
Okay, wonderful.
But that, I think, regarding the 15A specifically for per capita withholdings, it's going to be important to get that and update, the accounting systems and how you make those distributions, because I assume those withholding rates are going to significantly change, right? I mean, we don't know yet at this point, but there's the thought that, that would change.
They could, definitely.
Right. I mean, obviously the services, you can imagine implementing a large tax law change like this takes a lot of resources, and I think it's reflected in the fact that the employer withholding tables were out so soon. You consider when the bill passed and was signed to when they were posted. Those tables impact the vast majority of people, and so I would say I'm not directly involved in implementing tax reform, but that you can see that they're going through in the priority that they can to get things out to most people. So
perfect. Okay.
Okay, it's time for another polling question. What tax provisions do you think would more address the needs of Indian country but were not included in the current tax reform? And the options are provided. We're going to give you about a minute to answer this question. All right, let's check the results. Yeah.
I think, Christie, that the two issues with the eliminate the tax-exempt bonds for tribes, the essential government function test, that's a huge limiter for tribes that are wanting to obtain debt financing for their tribe. It's a hard test to meet. Could you maybe talk a bit about that and what your office has done in regards to addressing those needs for tribes that have that concern?
Well, one thing we can't do is really take any sort of policy position. We can only administer what's there. But I think it's one of the things we've heard. As you know, we work a lot with Treasury, conduct a lot of listening sessions and consultations, and particularly about this issue over time. And the Treasury Department issued a report to Congress at Congress's request when they put in the tribal economic development bonds into the code, which don't require the essential governmental function test, right? So they put those in as sort of a test. Does this work better? And they asked Treasury to give them a report on it, and Treasury said, please eliminate the essential governmental function test. It is a burden for economic development, but from an agency perspective, it's hard to administer. Right. So, like you said, there are gray areas with what is and isn't an essential governmental function, and people in our office have to try to figure out, does this bond qualify based upon what's out there? So that's why it's hard to administer. But that was one of the items that did not make it into this particular bill. So at the moment, we're still dealing with that.
There's probably not going to be any appetite for Congress to address tax reform anytime in the near future, correct?
I have no idea.
Put you on the spot there.
Yes, thanks. But what I think is interesting too to me is that there's the Indian employment tax credit, making that permanent, because that expired.
Right.
It has sunsetted and was not, and frequently we're in the position where it gets extended retroactively, but it did not get extended at all, even temporarily. It is now gone. And the accelerated depreciation, why these answers interest me is they reflect really the way they're about the same level of use. Mm-hmm. We get a lot more questions and have the Indian employment credit was taken up a lot more than the accelerated depreciation was. Mm-hmm. So it's interesting that kind of is reflected in that answer as well.
Absolutely.
Yeah. And I don't know if the new depreciation of property rules will help. It's not reservation related, it's business related, but that may be something that you can market or something. It's just not, related to the.
Right. And I know we talk about these same subjects here in a bit, but yeah, I think it's great to get people's feedback and see where their concerns lie, but very interesting. So, Christie, I think the discussion of the how this impacts tribal government employers and payroll and how that impacts tribal governments, but from a financing perspective and there's these new concepts of providing incentives for low-income communities. How does this tax reform, impact tribal governments overall?
Well, like I mentioned before, there's nothing specific other than if you are listening and you are part of an Alaska Native Claims Settlement Act corporation or settlement trust where there was one specific thing. The main impact for tribes is in their roles as, employers and business owners, that sort of thing, and obviously issuers of bonds, so, all those roles, but not specific to you. It's more the impact. It's just because of those roles. And as we said too, some things did not change, which is good. So we talked a little while ago about the business structure and competitiveness, and I just want to get back to that a little bit. We have a lot of different types of corporations that business structures that tribes have, and it may mean that nothing needs to change, but it's just something to consider that with the corporate tax rate for C corporations, taxable corporations going down so much, it does change the competitive advantage that tribal corporations have to the extent that that matters for you. It may not matter based upon, what does your corporation do? What kind of earnings does it have? Do you distribute them? So would changing your structure change the tax impact on the members that you distribute something to? And, if it's a corporation dealing with trust assets, that's, one thing. So that's where it gets complicated, where, you're going to have to consider whether there's any need to change anything. And then there are changes to the tax-exempt bond world. And as we said, there's not a change to the essential governmental function, and we are getting through the allocation levels. They're getting pretty low for the tribal economic development bonds, so there could be some changes to your financing and capital costs,
right.
which of course you'd want to consider.
Yeah. I think that's a great point. With tribes that have tax-exempt debt, now with the reduction in the corporate rates, it just became a lot less incentivizing for investors to invest in tax-exempt bonds. And so in a lot of cases, your agreements have these variable rates, and they could be, interest rates could be adjusted to incentivize investors to invest in those bonds. So yeah, it does impact financing costs overall. We should start to see more of that in 2018.
Now, one thing related to exempt financing, I want to talk just for a minute about clean renewable energy bonds. That is something that was impacted by tax reform, and there are no more clean, CREBs, as we call them, clean renewable energy bonds. And tribes do request allocations of CREBs, so if you did not receive your allocation, so I'm not saying you applied and hadn't heard, but if you actually, got your allocation before December 31st of 17, fine, but if you applied and had not heard by that date, there will be no more CREBs allocation. So if you didn't get it, then it's over. So
right.
I just don't want people to make the mistake of thinking they can still issue those, because they can't.
Right. Good point.
And I think Patty talked some about the minors' trust distributions. This is another one of I'll say, unintended impact, or unaware of the impact it might have probably with these minor trust distributions. And so it really is going to be something for tribes to look at their particular situation, what they have set up for when those distributions take place, and what the rules are related, as Patty discussed, about support, whether some of it is from earned income, that's very important, and see whether you want to in some way adjust or reform those trusts if you have them. And we're talking here about the ones where the tribe, generally this is where the tribe is the grantor, and so there isn't an income impact to the child until they actually receive a distribution out of that trust. So when we say minor trust, we're kind of shorthanding that we mean those grantor trusts.
Right. So. And if they, clearly with these changes to minors trust or the tax rules, for those grantor type trusts or the revocable type trusts, can it be easily amended, or is there clearly there might be a political concern of changing distributions, with several years down the road, but the fact is that can tribes easily make those adjustments?
Well, the tribe's the owner of the trust if it's a revocable trust.
Right.
But, that's really up to the tribal government and discussion with the members of what they think fits their situation and what they need.
This is a very important point, and I think it's a point that, really what tribes are going to have to do is review their individual circumstances, educate the members, and quite honestly run the numbers to see the impact. And and it may be worthwhile if you can show the economic benefit of the changes that perhaps can be made. That's something that would be definitely worthwhile worth your time doing, for sure, because this could have a huge impact.
Right.
So it's not something you want to find out after the fact. You want to be proactive on this.
Yeah.
So I think we would all recommend that, you begin to examine those trusts and see what can be done.
Right. Right.
Well, the last item, opportunity zones, I'm not sure how much how much focus tribes may have on this, but I'd encourage people to look at it. And just, there could be a webcast just on this, so we But there is going to be a new area for attracting various tax credits, economic development incentives to your area, and it's called, there's a longer name, but we're calling it opportunity zones. And that's going to involve you looking at your community and whether you qualify, but then getting your state government, in fact your governor, to put you on the list that individual, that government wants listed as the opportunity zones in your state. There's a lot of complication about it, but it involves census tracts that meet certain poverty criteria, and whichever ones in the state meet that, the governor can request, I believe, to the Treasury Department that up to something like 25% of those tracts be designated as these new opportunity zones. So if you know your community or part of your community qualifies and you want to be on that list, you're going to need to work with your governor, and the governors, I believe, have until March 22nd to submit those lists, because it's 90 days after the implementation of the statute. So it was signed, I think, on the 22nd. So that's something with a fairly short time frame that you may want to get people looking at if in your situation, attracting that sort of tax credit type of investment and incentives is something you want to do.
I can see, I can see a lot of tribes that might meet this low-income community status. It's a great way to get new investors into investing in housing projects or other tribal businesses. From reading the rules, and this just seems like an extremely beneficial thing for investors to park tax-exempt money for a long time. And like you said, the fact is that tribal governments need to jump on this now. If they do believe they have portions of their tribal lands that are qualify as this low-income community, they need to, maybe it's a simple call to the governor to ensure that that community is part of that list that's going to be submitted by the governor by March 22nd. I believe there's maybe a 30-day extension that could be applied for by the governor, but it's important for them to act now.
Right.
Yep.
Okay. So let's do another polling question. With the changes made based on the tax reform, will you reconsider the business structure of your legally separate tribal businesses? We'll give you about 30 seconds on this one. Okay, let's check the results. Okay. And that makes sense based on the individual circumstances of the tribes.
Some would consider it. I think that's something to think about here in the future.
And I think it's going to impact the tribal member-owned businesses is where you're really going to see that impact.
Christie, I'm going to ask a question here. Maybe I think we might address it later, but I know that there's so much debate about, tribally chartered corporation versus Section 17, but, would a tribe consider other business structures for their corporation if they want to hurry up and get into a certain business or a certain market? Is there things that tribes should be considering now if they did answer yes to this question?
I think you've covered them. I mean, it's what's the competitive advantage or disadvantage? What do you do? What business are you in?
Right.
And what do you do with those proceeds? Do you distribute them or not?
Right.
Because obviously, still, if it's held 100% owned by the tribe, held in any of those forms that we've issued guidance on, there's no income tax.
Right.
So.
Right. All right, let's move on.
So, I know that this tax reform, in a bit, to some degree, it overshadowed another significant law that was signed on December 18th, and this was impacting tribes that have 477 programs. These 477 programs, non-tax reform related, allow tribes to conduct employment and training programs that are administered by a number of federal agencies. And I think the fact is that this law made this program much more effective, reducing some bureaucracy and administrative requirements. And so I think to some degree that gets overshadowed by this law. This was a significant win for tribes. And if you do have a 477 program or are considering it, obviously you're going to be impacted significantly as a result of this in a good way. So I just wanted to make sure I mentioned that. And to talk a bit I wanted to cover this with you, Christie, just real quick here. I know NFOA has been involved in this too. But what are some of the major tax initiatives overlooked for tribal governments? I know we've kind of hit upon these a little bit more. We might speed through this, but just maybe you can give us your thoughts on some of these items.
Well, I think all of the things listed are issues of parity. That's why what I was told by tribal leaders and tribal groups is the reason they requested them to be in is because it's a matter of parity with state governments. And I think we've talked about pretty much all of them except maybe the last one, the special needs adoption tax credit. And I realize that doesn't impact maybe as broad a community, but I mean, it really is a good example of the difference between there is a tax credit if you adopt a special needs child. This is for individuals, obviously. If that child is placed with you through a state agency, you are eligible for that credit. Mm-hmm. But if instead it's placed with you through a tribal adoption agency, you are not eligible for that credit. It's a difference in the way those two governmental agencies are referenced in the code. So that may not impact as many thousands of people as employment tax or something, but it's a significant thing when you've taken that on as an individual, yet your tribe's adoption agency doesn't qualify. So those are all really from large to small issues of parity that we're asking.
Yeah, that's incredibly important. Important issue.
Very good.
And Christie, maybe you could spend a few minutes here, give us some updates at what you got going on at your office in IRS. Anything new?
Well, so not new, but recent. We did Treasury Department held a session on tax reform specifically for tribes, a listening session. It was very well attended. Tribal leaders from across the country came to the main Treasury building in D.C., to speak in person about their concerns with what then was, the bill being worked through the process. And a lot of those concerns were, back to the slide before, we want these things in. Yeah. Treasury doesn't have a direct role in that, but they heard the concerns, and particularly the concerns about anything to do with economic development.
Mm-hmm. Right.
And so, the session was attended by a variety of levels of people from the Treasury Department who, took note of those and have taken back items to try to figure out if there's a way, now that we do know what has happened with tax reform, is there something administratively that can be done with any of the ideas that tribes came up with. For the most part, the things asked for require statute changes. But, anything people think of, Treasury has its own tribal consultation email and part of their website, and they're very interested in any economic development ideas. And I'm sure they're going to continue to talk about those and have listening sessions with the tribes, because it was very beneficial for people to kind of share ideas in that forum. The part of this where I think also tribes will be able to talk about this is once we have a Treasury Tribal Advisory Committee. As you know, General Welfare Statute required that this committee be formed, and it is 4 members are appointed by Congress, 3 by Treasury, and the final member that is one of the congressional appointees is in the clearance stages, and we're hopeful to be able to make the announcement of that person very, very, very soon. So then the committee can come into being. It doesn't exist till all the members have been cleared and appointed, cleared, put into place. So that committee will be the place where tribes can go and express what they think are the needs that would be economic development, whatever tax issues through that committee. They specifically have a role in general welfare, statute implementation and training of both my staff, IRS staff, and your staff, tribal finance staff. That's one of the specific things in the statute. But they want to take on a larger role, and we're just really anxious for them to all be in place. Right now, the 6 members that do exist are trying to be open to any input people have. I know that they attend meetings like NFOA and NCAI and NEDA and whatever else, and they're open to individual calls from people with any concerns they have, and kind of their unofficial way of getting us information. So we're hopeful we'll have a committee soon and that they can take on a broader role.
Thanks for that update, Christie.
Very good. So now what we'd like to do to conclude the webcast is we've received various questions throughout the webcast during the duration of it. So what we'd like to do now is spend the last few minutes going through some of those. The first question, go ahead, Patty.
Yeah, so one of the questions is, what are the new phase-out levels to be eligible for full child tax credits? And the new thresholds are, well, first I'll say the old ones, because then you'll see the big increase. It used to be, well, for 2017, this will still apply. If your adjusted gross income is above $75,000 and your then the phase-out starts. If you're married filing joint, it's $110,000. Now, under the new law, the phase-out starts with adjusted gross income at $200,000, married filing joint $400,000. So it's a very big increase.
Okay, excellent. And just for the record, when we will send out this, it'll be available with all the answers to this Q&A session as well. So it'll be sent out, I believe, in a couple of weeks after this is done. We've got another question here. And this question is, what is the official title for the opportunity zones? And is there a website that can be passed along?
Well, I've seen it called Opportunity Zone Program, Opportunity Zone Fund, Qualified Opportunity Zones. Official title, I do not know off the top of my head. But website, I would think the IRS would have.
Yeah.
I think the IRS might put things in their tax reform section. That's a possibility.
Yeah, I'm not sure, because the first step to this involves governors applying to the Treasury Department.
Yeah.
But I think, they just...
Well, to our earlier point, it's really important that you work with your state representatives to get to the governor's office to get on the list. So I think, that's your first step related to that.
We'll work on trying to provide guidance on where to go. We can do that.
Got another one here. So why wouldn't I want to set up a corporation taxed at 21% versus a pass-through entity taxed at the top rate for individuals of 37%?
One of the reasons why it may not make sense is because corporations still have a double taxation, so to speak. The corporation pays the tax at 21. When they pass out dividends to the individual owners, they will pay a tax as well at 20%, and there also is the 3.8% net investment income tax. So it could be that because combining those two rates, that the top rate of effective rate could be just a lot higher at the corporate rate and lower at the individual rate. Individual maybe 29.6 if you count this 20% deduction, but you would want to look at those because right now I think the 20% pass-through is winning.
Okay, very good. Got a comment from one of our attendees related to the opportunity zone and basically what we found out here is in the state of Washington, you can contact the State Department of Commerce. So that was a comment from one of our attendees. Appreciate that. Got another question here. Okay.
Hang on a sec, we're looking.
Yeah, we've got a few here that we are toggling through. So the 6 members that we were talking about earlier, how can they be contacted, the 6-member committee we were talking about?
Well, at the moment, since they're not an official committee,
right.
I think that probably if you need to get their names, probably the easiest way is to email into the Treasury Department. So the particular place you'd want to email is to their consultation email, and that is tribal.consult@treasury.gov, and someone familiar with the committee members will, get their information to you. You can probably also, I would imagine, I haven't done it, but I bet you could Google Tribal Treasury Advisory Committee members and probably get the names of the 6. It's not a secret or anything.
Okay.
But I think if you email into Treasury, they'll have good contact info for them.
Excellent. Okay. I just want to make just kind of an overall comment. We've talked about a lot of information today. There's still some information related to tax reform that's going to be released. Moss Adams will be issuing alerts as these come out, so be sure to look for those alerts as we'll, for example, when the per capita table comes out, we will do an alert on that. So again, I want to just take this opportunity to thank our panel. And again, I'll throw another shout out to Steve Garwood with Morongo. His assistance was much appreciated in bringing the view of a tribal CFO to bear in this presentation. So again, thank you everybody. Thanks to the presenters. Appreciate your time. Christie, thank you very much. We certainly appreciate you coming and joining us. And, we thank all the attendees. So everybody have a good day and stay tuned for some alerts.
Awesome. Thank you, Brandon, and thank you, Christie, Patty, and Ryan for a great presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE Progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. And as you may have just seen, a survey just popped open where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us today, and we hope you'll join us again next time.